Hi guys, hope everyone is doing well. So we shall start off with the A2 course. So after looking at the AS course, let's start off with the A2 course now. Now with the A2 course, I want to start off first with manufacturing account. So I think manufacturing account can be linked back to our AS concepts as well, and it'll be easy for us to relate to costing concepts. So let's try to remember the difference that a retailer usually buys and sell goods. All right. So a retailer would have something called purchases. They'll be buying goods and they'll be selling goods. On the other hand, a manufacturer would be someone who would manufacture the product themselves. So for example, if I look at a clothes designer, so a clothes designer would buy material, they would hire staff and they would ask that staff to sew the material and to make, let's say, jackets over here. So that would become a manufacturer, and their essential job would be to manufacture these jackets and then to sell it out to the wholesaler or a shopping center, etc. All right, so the idea over here is that under a manufacturing account, we need to collect the total cost incurred in the production of a good. All right, so over here, we're just focusing on the production cost. So a manufacturing account is essentially prepared so that we can list down all the cost incurred by the firm within the factory. So these would only be your factory cost. Now, before we go ahead with this, let's quickly recap something we learned in AS absorption level as to how cost can be classified under absorption. So if I can just remove this for a minute. Yeah. So if you guys remember back from AS level, we would divide our cost as direct cost and indirect cost. So we would say direct cost is a cost that can be traced on a per unit basis. So if you can figure out that how much would it cost on one single unit, that would be your direct cost. Examples were raw material. You would know the amount of material required per unit, the amount of labor hours incurred on one unit. That would fall under direct cost. And indirect costs or overheads were classified as those costs that cannot be traced on a per unit basis. So these costs were usually paid lump sum. So what I can say is that the cost of production that we saw at AS level, that stays the same, which is prime cost, which is the total of your direct cost plus factory overheads. So if we need to calculate the cost incurred in the factory or the manufacturing cost, we still need to find the prime cost and add our factory overheads. And all the non-production costs, which I can also say are office costs such as admin, selling and distribution, these costs should go to the income statement. But the factory production cost, which is direct cost and indirect cost, shall go to our manufacturing account. All right, so now let's go back and let's start with manufacturing account. So now we can say manufacturing account is prepared only by manufacturing companies, and the essential purpose is to calculate the cost of production that is incurred within the factory. This cost will essentially go to the income statement. So now instead of the word purchases, we shall use the word the production cost, which shall be derived from our manufacturing account. Okay, so now let's start listing down all the cost incurred in the factory. So this will allow us to also see how a manufacturing account will look like. So we can start off with the company's purchases, which would be buying raw material. That is the first essential cost, and it becomes a part of your prime cost. After raw material, we know the next thing would be wages. So similarly, if a clothes designer would buy material, they would need workers in the factory or the staff in the factory to ensure that the material is converted into a jacket. So with staff, there will come wages. Now, we will divide our wages as we did at AS level as direct wages and indirect wages. Direct wages will be wages for the workers who are directly involved in the manufacturing process, and that becomes your direct cost over here. All right, and that is added to the prime cost. And indirect wages will be for staff that is not working directly in the manufacturing process but is somehow involved in the factory. For example, the supervisor is responsible for monitoring the staff. We should also remember that workers or your direct wages are paid on hourly basis, and your supervisor should be paid as a lump sum basis, which is why it should be classified as an overhead. So this cost will go as part of your overhead, whereas the direct wages should become a part of your prime cost. Now, if we talk about inventories, for a manufacturing firm, inventories would now compose of raw material, which they're buying, work in progress, which I will discuss very soon, and finished goods. Finished goods would be when the good has been converted into the final product. So, when we talk about a manufacturing inventory, you guys should expect that in the statement of financial position, we shall write down inventory to be inventory of raw material, inventory for work in progress, and inventory for finished goods. Alright, so now we can classify our expenses like this. Direct expenses, as discussed, direct cost would compose of direct material. That's the material you would incur to manufacture your good, which would also include the carriage inwards on material. Direct wages would be for the staff, which is responsible for manufacturing this good. Any other direct expense, such as royalties, license fees. What is a royalty? Royalty is a legally binding payment that is made to an individual or a company, let's say, for the use of their assets. So if you have obtained a franchise or any other copyright works, you will have to pay on every single unit manufactured a cost to the party from whom you have obtained that license or royalty. Alright, so that also becomes a direct expense because it can be traced on a per unit basis. Whereas for indirect cost or overheads, we can say this would include any indirect material, for example, cleaning materials, lubricating oil for machinery. That is also material, but I will transfer that to be an indirect material as it is not directly traceable on a per unit basis. Indirect wages, as we saw for factory manager's salary, supervisors' salary, store staff, cleaners, etc. And other overheads will be factory rent, again paying lump sum, heat and light bill, depreciation of machinery, or let's say building of the factory. So these are all indirect expenses. Okay, now the last thing to discuss, what is work in progress? So we need to understand that manufacturing is a continuous process. So it's not like the manufacturing will take a pause on the 31st December of the year. It will be continuing over there. So any inventory or any good which is still in a semi-finished state and has not been converted as yet will be classified as a work in progress. Alright, so if at the start of the year you have goods which have not been manufactured completely or have not been converted into finished goods will be classified as opening work in progress. Now this cost should be added to your cost of production. The reason why I'm saying this cost needs to be added is that if you have these goods on 1st Jan, so these goods would have been converted into finished goods this year and become a part of your cost of production. Alright, and if you have any work in progress at the end of the year, these goods have incurred cost on material labor, but they still have not been converted as yet into finished goods. So their cost will be removed from the cost of production. Right, so what I can say over here is that for opening work in progress, you should add it to your cost of production, and closing work in progress should be subtracted from your cost of production. So our cost of production equation will be prime cost, that's the total of the direct cost, factory overheads, and any change in the work in progress. Using this equation, we shall draw our manufacturing account. So now, lastly, I will show how a manufacturing account will look like, and you guys need to know how to draw the manufacturing account. Alright, so that's how a manufacturing account should look like. Okay, so let's try to understand our manufacturing account. So remember, the first half has to be the direct cost, which is the prime cost over here. Then I need to add factory overheads, and after that I have to adjust work in progress as discussed. So let's start with your direct cost. Now for raw material, we can use a simple equation, something that we use for our cost of goods sold as well. So we can start with opening inventory raw material, that's inventory at the start of the year. We can add purchases raw material, additional material acquired, less purchase return on material, that's material that has been returned. Carriage inwards, that's raw material transportation cost will be added. and closing inventory raw materials shall be subtracted. And this should give us the direct material consumed. So this cost will be the direct material consumed up till. Okay, and to this cost we will add the direct labor or direct wages, which is the amount paid to workers directly involved in your manufacturing process. Remember, these workers are paid on hourly basis. We shall also add direct expenses, any royalty or license fees, and using this, when we add these three costs up, we shall arrive at our prime cost. All right, so this total is your prime cost or the total of your direct cost. Okay, now after adding your direct cost, we need to add our factory overheads. All right, so our factory overheads can include indirect wages or salaries, factory rent, electricity bill, depreciation, plant and machinery, other overheads. Remember, I'm only talking about factory overhead. So over here as well, we're adding up any factory overheads. Now, once we can add the total of our prime cost and factory overheads, so that can give us the unadjusted cost of production. So till AS level, our equation was still here to add up direct cost and overheads to arrive at unadjusted cost of production. But as explained earlier, manufacturing is a continuous process, so we shall also adjust for work in progress. So what we'll do is we'll add any opening inventory of work in progress. These goods must have been converted into finished goods in the current year, and we will subtract closing inventory of finished goods. And using this, we shall arrive at our final answer, which is the factory cost of production. Alright, so that's the answer we're trying to look for, factory cost of production over here. This will tell you the cost of manufacturing the good or the total cost incurred within the factory. Okay, so in this video, we've learned the basic concept or the basic use of a manufacturing account. Why would a manufacturing company draw a manufacturing account? How a manufacturing account would look like? We also recapped the basic concept of a direct cost versus overhead and also introduced work in progress. So from the next video, I'll teach you guys how to draw the manufacturing account and also how to enter this information into the income statement.